Okay, what's up, my friends? Today is February the 11th. It's a little bit over an hour after the weekly open. Let's do the market outlook and plans for the week ahead. So let's go ahead and cover the boring bit first. Tuesday is going to be the CPI. I don't really care too much about these things these days, but I always just make a mental note of it at the beginning of the week. Moving on from there, the main focus this week is going to be paying very close attention to spot flows. I don't really care too much about what perps are doing. It's definitely, major emphasis on if the spot demand that we're seeing over the past few days sustains, then we're going to keep trading higher. If for some reason we see spot supply starting to hit, then we will probably be entering back into buy the dip mode. So yeah, that's probably a good segue to actually get into the technicals on the corn. So the first thing that we'll talk about is the major levels. So the major levels haven't really changed. I'm going to cover some more nuanced levels when we get into the medium time frame, but as far as the macro goes, we're looking at 44K as immediate support and 54K as immediate resistance. The ultimate upside target or major, kind of upside first trouble area is going to be 54K. I've been talking about 54K for, weeks, if not months now. So nothing's changed as far as that goes. The approach that you guys should be taking, in my opinion, is very simple. You're either looking to play momentum continuation off of VWAPs, or you're looking to buy the dip. And what you want to be paying close attention to is the spot premium or spot discount relationship with price right now. So over the past maybe 6 days or so, we've seen price drifting up with very little resistance from sellers. We've just been getting bought up relentlessly, basically, and that's been off the back of spot premiums, right? So we've had very clear spot demand that's been lifting the market, and as long as that persists, we should continue to drift up into the target area with ease. The reason why we want to be a little bit light on our feet and not get too caught up in that is that could quickly change. So the reason why you might want to be conservative or slightly risk off is going to be if we see spot discounts start to return. So to be clear, just seeing a spot discount without any context isn't going to mean anything, because you could get a spot discount where perps are just buying really aggressively, and so perps start to trade ahead of spot, and that's not really going to matter too much. What I want to pay attention to, which would actually make me worried, is if the spot discount starts to come through where we're actually getting spot supply hitting the market. And that's going to be, present in two ways, right? Either A, TWAPs are firing off and they're aggressively selling their spot, or B, the spot ask ends up being really strong and ends up making spot trade below perps. That's something that we should be familiar with, guys, because that's what we saw a lot during January with the Coinbase discount. So I don't think that you really need to pay attention to Coinbase specifically, just spot markets in general. If spot markets start to have either a heavy ask or have TWAPs firing off and spot is trading below perps, that's going to be something to be worrisome about. The other thing would obviously be paying close attention to the weekly VWAP. If the weekly VWAP has bearish structuring, especially if you have that confluence with the spot discount, then you want to be risk off and looking to, buy the dip. I wouldn't really recommend shorting any of this stuff. I have zero interest in shorting. If I end up pivoting this week to being more conservative, it's just going to be waiting to buy the dip. It's not going to be trying to actually ride any downside momentum. For the past, maybe year and 2 months, even really longer than that, because in Q4 of 2022, I've had zero interest in shorting ever since, we had all this downside momentum. I was loving writing swing shorts in, the first 2 or 3 quarters of 2022. But ever since then, right, it's been, buy the dip mode. And I really haven't been, I don't think I've taken a single swing short in over a year now. And well over a year, probably closer to a year and a half. And I continued to lean into that bias that if I was to be worried about price trading lower, I probably would just go flat on derivatives and just maybe eat the drawdown on the spot. Occasionally I'll look for hedges, but really the expected value on hedging isn't really even worth it that much. With how strong the upside market has been, it's just much better. You just eat the drawdown on your spot when it comes and buy the dip and keep betting on up. So to be clear, TLDR is you want to be either looking to play momentum off of VWAP retests or looking to just buy the dip into key zones. We'll look at this in more detail in a moment, but essentially this kind of local uptrend that we've had over the past week or so has left quite a lot of voids And because there was really an absence of sellers during all of it. So if we kind of get any shallow dips into this area, that's probably where I'm gonna want to be gambling on my next batch of longs. So for more information, check out the Paragon group with the link below, where I cover everything from how I trade to how you can develop your own style. So let's go ahead and get into the medium time frame. I had a couple of things I wanted to talk about from a more detail-oriented point of view. So what we're looking at right now is basically I'm looking at 49K is kind of the main boss for resistance to get through. If bulls are able to get through that, then we're probably just going to trade up towards 54K pretty quickly. Beyond 54K, the next kind of target would be 60K. 60K is going to be our last big resistance. If bulls get through 60K, I don't like speaking absolutes, but it's basically an inevitability that if bulls get above 60K, that testing 68K or whatever the actual local top on the last trend was is going to be a cakewalk, right? So 60K is going to be major resistance, 54K is going to be major resistance. I don't think that any of these are really going to stop price for anything more than a temporary pullback. So other things that we wanted to talk about was the kind of the shallow pullback and then the bigger dip, right? So we'll cover the bearish scenario first. The bearish scenario is that where this gets completely bonked back down, and then I end up getting to go with my macro dip buying zone that I wanted to play originally, which was like trading into the 38K. I don't really think that this is something that is going to happen, but it is a good idea to have, you know, the plans lined up in the back of your head just in case. So technically, there is a small probability that we could trade all the way down towards 38K and have that be the swing long zone, right? I had talked about this time and time again. I wanted to see us dip into this zone and then dip into it again, and then I was gonna, you know, punt, you know, absolute max risk longs. And that setup obviously didn't come because spot markets lifted us up, and it looks like I'm, you know, gonna have to play chase on it. So what is more likely if we do get a dip is a shallow dip into the voids, right? So I'm not gonna, you know, don't look at this diagram or doodle rather and think that it's supposed to be precise. Who knows whether it's into like 46 or all the way into 45 or 44. Technically 44 and a half is the macro level to pay attention to, but that could get front run really. So it doesn't matter. TA is a meme when it comes to all this kind of stuff anyway. So I think that if there is going to be a dip, that this is probably what it's going to look like. Some sort of more shallow dip into this region that gets bought up, and we just continue to chug along. So again, main focus this week, whether we're talking about Bitcoin or altcoins, is going to be playing momentum to the upside. And, you know, obviously that's probably a good segue to get into the altcoin section. So let's do that. So Solana is one of the only things that I have any interest in holding spot long term on. My only major bags are Bitcoin and Sol, and that looks like that's going to be the case for a while now. Potentially, I will start to add in ETH back into my portfolio in a meaningful way. I do have a bit of ETH, but nothing crazy, not enough to where I really consider it a major part of my portfolio. The only things I would really want to hold long term are going to be Bitcoin, Solana, and potentially ETH. I think that I'm probably, as somebody, I've been bullying the shit out of ETH for a long time. You guys have seen that for like, you know, year or two. I've just been like bullying ETH and saying that it's dog shit and the chart's down only, blah, blah, blah. It's super weak compared to Bitcoin. However, let's not get complacent with that. Classic Pavlovian argument, just because it's been a weak piece of shit for a long time doesn't mean it's always going to be that case. ETH normally goes through that cycle where it's really weak, and then when people get complacent with it being weak, it becomes strong again. I know I meant to talk about ETH, or Solana, but we're going to talk about ETH for a second. Eventually, ETH is probably going to be strong, especially when the ETF narrative really starts to emerge. We saw that for a little bit. If you go look at ETH BTC, there was a big spike when the ETH ETF kind of narrative really started to emerge. I think that when that starts to cement itself a little bit more, ETH will really start to shine. So I will eventually be looking to put ETH into my portfolio in a big way, but I don't want to do that just yet. Back to Solana though. So what did we talk about with Solana recently? What we talked about was at the beginning of the year, I went ahead and cut a bunch of my Solana up here because I didn't like how the yearly was developing, right? It, you know, bearish yearly while we're getting rejected. What I said was I wanted to see it flip it, and then I would buy it back. So that's exactly what happened. We got this kind of structuring where we traded back above it, used it as support, and now we're flipping it. Basically, we want to see it continue to be held as support, and as long as it's held as support, it's bullish. It's that simple, guys. We don't need to overcomplicate it. So I drew this risk reward tool one for the purpose of approaching, or for adding purposes, right? So if we pull back into the $100 region, I'm going to probably look to buy even more SOL and increase my exposure, potentially even taking swing longs on like a perp. So it really is simple, guys. I think that this is what's going to happen, that we'll continue to develop a bullish VWAP. As long as Bitcoin looks healthy, this is probably going to trade up a lot. And all year, for like probably how long has it been now, guys? Like 14 months, something like that. I've been pretty bullish on Solana, basically since the bottom. And I really want to continue to lean into that. Just a little bit of context for why I wanted to sell it. From a psychological standpoint, it was rough for me to not want to sell my Solana, because my worst Solana buys, I was up 9x on. Some of my lower Solana, some of my buys I was up like 11x on. So it was really hard for me to not want to take that profit, right? So that's why I did that. In hindsight, I ended up wasting a tiny bit of money by selling the Solana and buying it back. It is what it is. In hindsight, it was a mistake. If the market was to nuke, though, I would have obviously felt like a Giga Chad. So it really is, just the flip of a coin. Talking with Sting a little bit recently, and he basically was like, he was like, I respect what you're trying to do by protecting your stuff. Personally, I'm just gonna, ride the drawdown and ride this bag up. And I think that's going to be, I'm going to try to have that approach where I just don't care and just be a bulltard and say, like, even if Solana has some serious drawdown at some point long term, it's going to go up a lot, right? So that's going to be kind of how I try to approach that. But that's pretty much enough on the Solana talk. TLDR is we want to buy dips on Solana. As long as the yearly, develops bullishly, we should be bullish. So we're looking for the yearly to hold a support, and then we want to see the yearly start to slope upwards, right? So the longer we spend above the yearly and the more it starts to slope up, the more we want to be bullish. It's that simple. Make sure that your risk is well defined, and good luck out there. Cheers, everybody.